Yesterday has been literally one of the worst days in the whole crypto history. Something like 20 billion have been wiped out from the whole market just when we talk about liquidation. What I want to do with you today is going through the whole that is happening into the last couple of days, but also doing from one side a step back, because what we have seen isn't just something like a random fact. That's something, at least in my private community, that was something I was literally saying since a while. Guys, something is probably gonna happen. Honestly, also from my side, I wasn't expecting anything like what we have seen yesterday. But that's what happened. There are a couple of reasons why it has been so violent. I will tell you just in a moment what I think and why it happened in this way. But on the other side, what I want to do is also try to understand, okay, we have seen this, but what is going to happen in the coming future? Is it just the beginning of a bear market? Because if we just follow the halving cycle, we are done for this cycle. But is there any other view that we can embrace or not? That's what we are going to do together. Always remember, guys, that in this channel is just about educational content. Nothing has to be intended as financial advice. If you want to invest in anything, that's fine, but do always your own research, guys. That's so important. That's your portfolio, and it's just on you how you can deal, how you can manage these kind of moments. Okay, guys, don't forget also to leave us a big thumbs up, drop a comment to the comment section. Don't forget also to check out all our links. I also publish an article about this matter on our Substack, and you can find also all the other information just in the description below. Okay, guys, so let's start by using the raw numbers of this day. This terrible, definitely, day. So I want to start by obviously checking the price of BTC. And as you can see, we are on a weekly candle, and the candle is pretty, from one side, awful, literally. On the other side, it's also showing us how we still keeping this support of the blue line, that is the 21 days exponential moving average. That's something that historically speaking has always been a support. As you can see, it has been a support all along, starting from the 2024, and also in the past has been working pretty well. As long as we were above this moving average, we were in a bull run. In this moment, what we have done is, from one side, keeping it as a support, on the other side, retesting the red line that has been the 50 days simple moving average, 50 weeks moving average. And as you can see, starting from 2024, we tested it already 2 times. And if we go back in time, you can see that we have been consolidating just above the red line and going on. And from the moment on we broke this red line that was in 2023, we have always been above this moving average. As you can see, even in 2021, when we were in a bull run in April, May 2021, we retested, we had the last impulse of the cycle, and from the moment on we broke this moving average, we were in a bear market. So it's pretty important that we stay above this support. Always remember one thing, guys. Supports, moving averages, and so on are not a science, a precise science. It's just a proxy that we have to adapt the way that we give it a meaning, because the market is changing and different kinds of situations can bring exceptional things, exceptional situations. Let's not forget what happened in 2020 here. If we take a chart with a longer history, for example this one, you will see immediately that in 2020, for the COVID crash, we broke any kind of moving average just to start again, and we found again a balance much above these moving averages in just a couple of weeks. So exceptions could happen, obviously, breaking this moving average wouldn't be a good sign. So that's the reason why we have to keep an eye on that. But let's go back to what happened, and let's use the data from CoinGlass that are showing us the level of liquidation that happened in the last 24 hours, basically. And as you can see, if we put here 24 hours, you can see that something like 18.7 billion of dollar have been liquidated just in this time. But if we check what happened from the different exchanges, you will see that the leading exchange is Hyperliquid, followed by Bybit and then Binance. The reason why I'm showing you this rank is simply because, guys, remember, this is just an underestimate of the real numbers. It's clear that the exchange where most of the liquidations happened was Binance, not Bybit, not Hyperliquid. The main reason why Binance is just in the third position is because they are not sharing all the data. The API that is used by CoinGlass to recollect all the information from these exchanges is not capable to support and to deal with this kind of black swan. That's the reason why we are not seeing all the information available into this recap. So the real amount of liquidation have been much higher than what we are seeing on CoinGlass. So just to give you an idea, guys, when we talk about 20 billion of liquidations, that's something that has a magnitude of 5 times what we have seen in February. If you don't remember what happened in February, it's this candle here. Can you see it? This candle that for Bitcoin brought something like 18% down, but if we take it on Ethereum, it's this one. This one has been literally terrible. That's a weekly candle, but if we move to a daily candle, you will see that it's not better. It's literally the whole candle. Its daily candle happened just 27% in a matter of hours. So this was that candle. The reason why I'm doing this benchmark, because on that day it was around 3-4 billions of liquidations, and at that time it was a record high of liquidation. This time we had something like 6 times more the amount of liquidations, but a drawdown that wasn't so bad. I mean, it's bad because overall we had something like 22%, but still 6 times more liquidations, but just a comparable and even smaller amount of drawdown. There are several reasons why these two flash crashes are different. From one side, when we talk about Bitcoin and Ethereum, we are talking about assets that at this time are much more mature and established compared to what it was in February. The depth of liquidity is much higher. On the other side, the same story doesn't apply to the other altcoins, because what we have seen yesterday has been a flash crash that literally destroyed pretty much any coin. Look at this chart. This chart did something like 88% in just a single day. And to be fair, it's not a single day, it's just a couple of minutes or something more. So how it is possible that a coin can dump by 90%, a coin, in this case we are talking about Story IP, so that's a pretty big protocol, that's the top 100 coin, and even so it had this kind of crash, and the story still applies. This is Curve, I mean, that's a pretty decent protocol, guys, but even so, another 76%. If we check AIXBT, pretty famous project, another 86%, and the story goes on for any kind of coin that we can analyze. So what really happened? Because the justification that is just due to the tariffs that Trump announced at 5 p.m. Eastern time, it's not correct, guys. It's not correct. I mean, that's a good excuse, but it's not really what happened. And we can see it. It's interesting to notice what happened also on the CME, because look at this chart. This is the candle when the tariffs have been announced by Trump. And as you can see, it was a pretty dramatic but still decent 3.6% of drawdown. But if we check what happened after that, I mean, this is the candle that we were analyzing in that moment. But after that candle, we had this major one, 15 minutes with something like 11%. And if we take, for example, Ethereum, we will see that we had this first candle and after that another 13%. If we go, for example, we were analyzing it just a moment ago, IP, I mean, from that candle was this first one, we had another 2 candles with another 87%. So what's going on, guys? What happened? So we can notice 2 main things. So first of all, guys, I mean, they waited for the moment when the CME was closing. Why to wait? I mean, as we know, at this time, the CME is the major player when it comes to Bitcoin. So it's providing most of the liquidity. As you can see on Bitcoin, it is still the exchange where most of the open interest is open. If we check on ETH, same story applies. So the CME is the major player for both BTC and ETH. So that's something that we have to remember. So they waited for the moment when it was closing in order to have the need of less liquidity to move the market by a lot. The point is it the kind of effect that they were expecting or not? Because I mean, 10 billion, 20 billions of flash crash in terms of liquidation, something that we never saw in this market. I don't know, honestly, but we can try to analyze the causes, the root causes of this kind of thing. Because obviously, if we see these kind of flash crashes, there is only a cause. And it's because market makers weren't capable to deal with that kind of selling pressure. Because to have these kind of crashes, what you need is an empty order book. Because I mean, guys, something bought IP at $1, but if you check, for example, PubCat, you can see that someone bought it at 0.06. On Atom, something bought it at basically at zero. It's pretty embarrassing. So it means basically there were not a liquidity at all on the order book. They literally wiped it out completely. So there is the need of a lot of money. On the other side, what we need to remember is also that if the order book have gone to if the order books have gone to zero, it means 2 things. Or the market maker retired their liquidity, so they withdraw the whole liquidity on the order books in order to just say, I mean, I'm not understanding what's going on, I will just waiting. It's a possible scenario, but I don't really believe that. On the other side, there is a possibility that market makers tried to put liquidity, but they were literally overwhelmed by what happened after that. And if it is that's the case, it simply means that some market maker lost money. Because if you put liquidity and you are liquidated by yourself, I mean, not by yourself, but by someone else who is keep putting selling pressure, there is a possibility that you, as a market maker, you will be liquidated too. It's not that you are immune to liquidation. I mean, you have a lot of money, but you are still vulnerable to losses and so on. I mean, that's just a speculation, but it's something that is absolutely possible among the many market makers that are moving the market, that someone lost money into this kind of black swan event, because what happened is literally impressive. So let's remember that. Why? Because the other thing on what is going to happen in the coming future is, I mean, market makers are providing liquidity to the market. Without them, the market is much more volatile, much more vulnerable. and we don't know which is their health condition when it comes to their finances. Maybe they lost money, maybe they not, maybe there is some contagion that is possible among market makers and all the players that are into this market. I mean, I really don't know, and nobody knows except if you don't have some kind of reserved information. So what I want to say is, guys, pay attention. This is not the moment to bet. The market is really unstable and something that we really struggle to describe what is going to happen in the coming future. So once we said that, let's try to understand which is the overall situation. And to do that, I want to do a step back, also using which is the current condition of the TradFi market. So let's check it out, the Nasdaq, because if we check the Nasdaq, you can see that aside from this terrible correction that happened yesterday, I mean, starting from April, the market has been going only up for a lot of months. So a correction is needed. Even in the past, I mean, we always had this kind of moment with a correction every 6-8 months or so, and these kind of moments didn't happen so far. All the corrections were pretty small, and we are still waiting some kind of a drawdown also in this market. So that's the first thing that we have to keep in mind. One candle, it is unlikely to be enough. The reason why it's so important to check the Nasdaq or the S&P is mainly because the crypto market is highly correlated to this market. So if Nasdaq or S&P are going through a drawdown, it is unlikely for BTC to outperform and the whole crypto market to outperform the TradFi ecosystem. So as you can see, what we can expect is a correction into these markets. On the other side, when it comes to BTC, we can check out also a couple of things. So first of all, this is the chart against the gold. And as you can see, what we just did was breaking down. It's not a good sign, at least it's showing that we are going through a correction, major correction, not major correction. How long it will last, it's tough to be said, but that's what is going on right now. And we broke the logarithmic trend line that was keeping the movement since January 2023. We broke first this line, we broke even the one that we built starting from April. We retested it just a couple of weeks ago and we have been going down since then. Same story applies when it comes to BTC against the Nasdaq. As you can see, we broke the trend line of September 2023. We retested last week when BTC did an all-time high and again flashed down. So this is a kind of a situation. But if we try to check also other things, for example, this is the chart of others, so all the altcoins except the top 10, so the altcoins from the 11th position to the 125 position. As you can see, we just touched a pretty interesting level. That is this one that was the same of May 2023 and the bottom of December 2022. So it's pretty interesting that the market touched exactly critical levels before reacting and reabsorbing the drawdown. And the same kind of pattern looks like happened also for others against the BTC. That's a chart that I'm keeping an eye a lot because to me it's the most significant when it comes to the annual season. Annual season could happen only in the moment when others are outperforming BTC. And one thing that you could notice is that I put this line a while ago, this yellow one, and it was corresponding exactly to the minimum of December 2020. That was the time when we had this flash crash. I mean, it kept going for several months, so from October to December, but it touched this critical level over here. And it was a level that I always looked at, wondering, I mean, if we are capable to reach this level, we have literally completed the whole movement, because basically what we had was a big bump from here to here, and after that this situation that brought us, I mean, my lines are pretty awful, but I think that you got what I mean. And what I mean is literally we have been going up, touch the upper level of this channel, and then going down again, returning exactly at the same level over here. And this level happens something like, as you can see, 1003 is 1700 days after, so something like 5 years after. So that's a long time. Is it enough or not? I mean, this drawdown has been pretty inefficient, and we can expect that this spike could be revisited at least in part. But it's interesting to notice how we touched a critical level on this chart. And the same kind of thing could be noticed when it comes to the chart of the total tree. We found support on this trend line, and again we come up again above the blue line, that is the 21 weekly moving average exponential one. So it's interesting how the market, even if it was really weak, it found support on critical levels that usually are the levels that we reach at the end of the bear market. So basically what happened was that in terms of amount of liquidation, in terms of drawdown, we had the same amount of drawdown and liquidation that we usually have in a whole bear market, but just in a couple of hours. That's pretty impressive. So now the big question is, are we done, or is it just the beginning of a real bear market? Not that what we had so far was a fake bear market, but one thing that most of the people were wondering is, I mean, we had this stop over here, the 6th of October, that was exactly the same amount of days after the previous high and the same amount of day after the high of this previous even cycle. So from 2017 to 2021, from 2021 to this top, it's always the same amount of days. So under a halving perspective, we reach the top. But the reality is that, I mean, it looks pretty unlikely that as it is, it's enough. Because if we check, for example, the chart of BTC against gold, I mean, it's pretty surprising to see that we are much below the top of the 2021, and at that time Bitcoin was pretty much nothing. Nobody was thinking that BTC could have been, just in a couple of years from that time, be called by the Fed as gold, digital gold. It was impossible to think that a government like the United States would have been choosing BTC as a major, as a critical reserve. But that's what happened. But even so far, the chart didn't price, or at least that's not something that we can see from these charts, because I mean, nothing happened. So what's really going on? I mean, I don't have an answer, and nobody can have an answer, because remember guys, all the markets are just a matter of probabilities, and we can just try to understand which is the likelihood of an event instead of another one. But what appears evident is that this cycle has not been a real cycle as we know, at least in terms of the halving cycle. We had a lot of accumulation, and if you check all the on-chain metrics, you will notice that the accumulation has been incredibly high. But aside of the accumulation, we have no more retailers. Right now, we probably wiped out a couple of other market makers. We provoked a lot of losses among most of the operators. We literally canceled all the perp position, because obviously, I mean, even if you were like 1.2 on leverage on any altcoin, you have been liquidated, because basically if a coin goes down by 90% just in a couple of minutes, there is no way that you could still keep your position open. So what to expect right now? I mean, we need to find a new equilibrium, and we need to see what the stock market, the US stock market, will do, because as I told you, I do expect the Nasdaq, the S&P going through, I'm not saying a major correction, but definitely at least a consolidation at a lower level before starting again. Could we have the usual Halloween effect? So the Christmas rally? It is possible. It is still too early to be said. Right now, what happened is an historical flash crash that we need to digest, and we need to understand which direction will take the market. I doubt that the market will simply pump again from now, but let's not forget that, for example, on Monday, the market with any probability will open with a CME gap, and this gap could be filled in the coming days. So it wouldn't be surprised to see a pump just going towards the CPI data are coming out at 15, and from that moment on, let's see what's going to happen. I do still expect more weakness in the coming weeks, but it's really an unknown territory right now. So we have to be patient and wait to see. I do not see any reason why to think that from now on we are going to start a multi-years bear market. It's not what the market looks. I mean, we just touched the level that usually are signaling the bottom of a cycle, not the top, at least the altcoin wise. So we have this kind of discrepancy between what the chart of Bitcoin and the timing of Bitcoin is suggesting to what altcoins are suggesting on the other side. All I can say is that it will be really unusual to see at a top in a moment where there are no retailers, there is no FOMO and nothing like that. So I remain cautiously bullish for the next 6 to 12 months, but I want to see what's going to happen in the next 30 to 60 days, because in these days we are going to see really which is the direction the market is going to take. And let's pay attention, don't rush anything, because if a real bull run or anything good is going to start, it's not going to happen in a couple of hours. That's probably something that's going to last for a while. Remember, we need to attract again all the investors that left this market. Okay guys, let me know what you think about this matter. What do you think about this insane crash that happened just yesterday? Let me know into the comment section below. Let me know which is your expectation for the coming weeks and months. Guys, see you soon with another video. Bye guys.